Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin US dollar index on the 30-minute time frame. I like the 30-minute time frame because a lot of times you get something like this where it goes red, green, red, green, red, green, red, green, red, 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 green, red, red, green, red, green, red, green. You get the point. So, and it helps balance things out in my mind when I see it going. It's going up. Oh no, it's going up, up, up. Oh no, it's going down, down, down. Turn around, stop. So, currently, we seem to be breaking out of this parallel, downward sloping parallel channel that I just drew moments ago. And you can see that, well, here, this red wick is way outside it, but I lined it up with this green wick here and this green wick here. And it mostly catches that red wick. So you got those 3 points there. On the bottom, you do have, oh, you know what? Well, yeah, okay. This is, I just realized this is an arrow, not a wick. But it gets that red wick there, that green wick there, this red wick here. So, yeah, and then it's kind of sloppy after that. But, so, point being, do we just continue chopping down this channel into Friday morning? Which would get us... Now, note also that we did come out of this channel here. So do we continue somewhere chopping around down this channel, down to the bottom of the Gaussian channel, which is marked by this pink dotted line here? And that would get us, let's see, Friday morning when the labor numbers come out would be like right around there. So yeah, do we come down here and then get a little wick out there and then bounce? And that would be around 92,200. So that's one scenario. Now, always the charts give us a whole bunch of different scenarios. That one is a possibility. Now, I've listened to others, and some are thinking that, you know, the bottom may not be in, or we might have another flush out. Now, I think that this flush out down to, why is it only, oh, yeah, that's right, it was 91.1. I think that flush out came a little bit early, that they meant to do it a little bit closer to Friday so that we can pump Friday. But they had to do it when they had the narrative. So this did flush out a lot of people. Now, people that are thinking we're going to get another flush out are thinking that a lot of people went long and have their stop losses down here. But I don't necessarily think that. I think people are pretty frustrated right now. I don't think a lot of people are I don't know. And only maybe the people running the show have the answers for that. I don't have the answers for that. It's beyond my my whatever the word is for that. So, but you can see currently we are even breaking out of that. The first scenario, now see, that's the second case scenario that I imagined. The first case scenario, and I did that to see if, hey, what if I was wrong about my first case scenario? Now we're gonna these arrows here have something to do with my first case scenario, because I saw that I keep seeing W's and potential inverse head and shoulders and stuff like that, but you know that's, I mean, that the chart zigzags the price action goes up and down. So those things are naturally occurring all the time. But so we do have a neckline right here about, if we were, what I saw was a potential inverse head and shoulders forming here with this shoulder, a head, and then potentially another shoulder right here. But it doesn't look like we're forming that shoulder. It actually looks to me like we are actually going after this liquidity. Now, I haven't refreshed this chart yet, because what's really frustrating to me is so often we do not go after the liquidity above us. It's like the bears run the show. They're always liquidating all the longs constantly. Get anywhere near the yellow down below and you just get liquidated. It's like somebody has an infinite supply of Bitcoin just dump, and with no repercussions. So, I guess maybe they make more money doing that, liquidating the longs. I don't know exactly how all that stuff works. But now, if I refresh this chart, let's see if we are going after that yellow. And we, in fact, are a little bit. We're coming up on that yellow. Now, do we stop or keep going? A lot of times we'll leave like a little bit of yellow there. Now, this isn't a lot, mind you. 12 million. You know, a lot is like 30, 40, something like that, or more. Let's see what it looks like on a 24-hour view. Oh, look at that. We're just getting started, possibly. Possibly we coming up here to get this stuff. Oh, that's up around, up above 99,000. Starting around 99.2 and higher. Let's look at a little bit longer time frame. See what else could be up. Yeah, potentially out there. There's more up here around 102-ish. Yeah, probably starting at 102.5 or something like that. Yeah, 102.7, yeah. So, could this be a start of the return to where we started this dump from here? Potentially, because people are making a big deal out of this jobs numbers coming up Friday. And they're just jobs numbers, people. And they change all the time. They change from month to month. And any one single thing isn't going to be an indicator of it takes months and months of data to determine some sort of a trend. So I think people in this market is just too hypersensitive to this stuff. And is this jobs data going to be any sort of a narrative to get us to either dump or pump? I think that once it comes in, because typically what we do month to month, I believe, is that we dump into the uncertainty of the jobs data, and then we always pump out of it. I don't know. I'm not going back and looking at that stuff, but I think I've heard Ben Cowan say something like that. But don't. Oh, look at this. We are coming up right on the 55 exponential moving average right here. So let's see if we blast through that or if we get rejected from it. Now, also, scenario 2 is that we do have a W-ish pattern forming here. And I measured the middle section here. And I took my little... Well, you know what? Actually, that's the... No. That's the head and shoulders measurement. Regardless, it's about the same. And if you put the target over here, it gets us up to here. Like that. So now we have, and what kind of time frame would that be? Well, sometime when Europe opens up here, Europe opens for trading, possibly. So then that could play out, and I zoomed out a little bit here. Here was our little W here, and then we take that and we move it up here, and that would give us we'll have to wait and see how it plays out. But we have a larger kind of W. I was looking at this earlier, and it kind of didn't play out the way I thought it would right here. But you do have this moved here, marked by this move upwards, and then this move. Mind you, we're on a 30-minute time frame, so it's kind of a little bit choppier if it was on an hourly. Well, still, you could see this here to here to here to here, and then up to here or whatever, wherever it stops, maybe right to here. Oh, you know what though? Depends on if you're going up candle bodies, because this is a good section right here. This is a big wick above here. So actually that would be the top of the formation there. And it's funny that target comes right to here where we did see this resistance. But then the measurement from the bottom of this left W shoulder to the center and place the target up there brings us up to this line. I don't even remember what that line was, but I remember it was important. And that would be, let's switch to a 4-hour. That would just simply be a larger part of this pattern here from where we started our dump up at 105 down to 91, back up to 102-ish, back down here to 96, and then potentially back up here. That's right, because we were looking at this resistance. I don't know how this exactly will play out. Point is, you got that. And the target here would be this green line, and you place that, the measure move would be there. I mean, the measurement would be there, and you place the target here. This green line, let's change it to a different color. We're going to want to make it red. Let's make those lines this color. So that brings us up here in this area around 114, 115,000. Anyway, back up to what we were looking at days ago when we thought we were going to break out here. Instead, we dumped, but a breakout from here could have taken us because we were trading above the center line of the white parallel channel right there. The bottom of the channel is right about where we're at now. I think we're just below it. And the top of the channel is up here at around 100 and 114, 113 and a half. But well, let's just leave it there because I am going way out and expecting a lot of things to happen that haven't even happened yet. So let's just see. So we got two scenarios, a dumpy scenario and a pumpy scenario. And who knows what's going to happen. Let's go back to our 30-minute time frame that I like so much. We are seeing a lot of green up here, so that's nice to see. The volume's kind of inconsistent. It's you know what? We get the highest volume during U.S. market hours anyway, so but we do have these big spikes here, which is consistent with the volume seen during U.S. market hours. So, and I think the guys that are running the show are kind of leaving their options open, which they always, I feel that they do. And depending on how they, what's the best move for them at the time, they'll go either way. So be prepared for either one of those. Who knows what could happen. But if we did dump down, I think we would come down to 90, 92-ish. I don't think we're going to go down into below what we've already done. Heck, maybe we do. Maybe we do see a wick below that, a quick wick below that, into like 89. Who knows? And I'm not going to go into more detailed analysis to try to figure that out or not. But so here we are. We did get rejected on the first attempt at the 55 exponential, but we are now making a second attempt here. And on the liquidation heat map on CoinGlass, it does look like we did get that yellow. But let's see what that amounted to here. Shorts, 2.65 million. So not a whole heck of a lot. We always get more longs than shorts. Anyway, now here we are on the 24-hour view of the liquidation heat map. And maybe we do keep going up to that yellow above 99,000. We have come now through the okay, stop moving around. I don't know why you're doing that. We have come through the 55-day exponential moving average here. And this is the bottom of the white parallel channel that we did get rejected off of. I think the red line more accurately represents the white parallel channel. This is drawn out on over the course of like Bitcoin's history. So you're looking at differences of what's the difference between this? 460 to like $80 there. So it's a range, but it does look like we are getting rejected off the red line there. But try again. And we got about 20 minutes left in the hour. Now, let's see what this looks like on our hourly candles. And these look nice. And look at this big volume here. Good. Yeah, so we are getting good volume in our 4-hour candles. Nice. So with these two 4-hour candles, we have surpassed the candle bodies of the last three 4-hour candles, if this in fact stays for another hour and 20 minutes, 15 minutes left. Great. Nice to see us back up here. But let's see if we can get above. I want to see us get above this white parallel channel. Otherwise, it was resistance right here. But this is significant because it was resistance on 1, 2, 3, 4, 5 4-hour candles where we wicked right up to it and we couldn't get through it after our dump down to no, not that. Yeah, after our dead cat bounce thing here. Now, is this a dead cat bounce or will we get through here and attempt higher? We shall see. So if we can get above this here, this is a big move up above. I'm going to say 95.5 and maintain that. 98.5. So let's see what happens. Okay, I'll leave it there. Stop talking. See you next time.